Despite the lack of high-quality inventory, the third quarter of 2013 marks the fifth consecutive quarter of positive absorption, though transaction velocity is experiencing a shift due to much of the vacant property options being exhausted. With high-quality space commanding premium prices, many users have opted for creating their own solution through build-to-suit projects. As a result of new building projects, vacant land has once again emerged as a focus of real estate transactions. According to the Commercial Alliance of Realtors, year-to-date land sales have increased 30%, and our industrial group alone has closed deals or put under contract over 150 acres of land with 6 different users. As the need for manufacturing space continues to escalate, the demand for land will continue to be strong. Construction of industrial space has already reached its highest levels in 8 years. Gordon Food Service has begun erecting a 94,000 square foot freezer facility at 651 50th Street Southwest. Chet Pellet recently completed both an 85,000 square foot build-to-suit project as well as a 65,000 square foot expansion. And Undercar Products Group is wrapping up its 110,000 square foot expansion. As we look ahead, vacancy will continue to decrease, although at a more modest rate than recent quarters, as the inventory continues to tighten, especially for the most sought-after space. Expect a strengthening of new construction projects being kick-started with the area's first new spec building and an increasing number of land transactions in the coming months.
The West Michigan retail market returned to more normal levels of activity and absorption following last quarter's exceedingly high volume. Nonetheless, the third quarter of 2013 remained positive with a considerable amount of transactions coupled with healthy tenant interest. The Rivertown corridor has been by far the most active retail submarket over the past quarter. With the addition of the area's first Chipotle, Potbelly's, and Five Guys Burgers and Fries adding to the Bucktown development where Target and Cabela's is. That development is continuing to attract a wide variety of retailers that are securing space in the newly constructed strip centers. Other historically active submarkets like 28th Street Southeast and Alpine Avenue are still garnering high levels of interest. However, there is a significant lack of space to satisfy their demand. The redevelopment of Centerpoint Mall currently hits 97% occupied, which is the highest percentage since the mall first opened. Limited space and diminishing vacancy rates are putting pressure on developers to create more supply in these demanding areas. Looking ahead, our national retail forecast is heavy activity in the first and second quarters of 2014. We will start to see much more new construction in the main corridors of 28th Street Southeast, Alpine, and the Bucktown area in Rivertown. As the new construction begins, we will see the rates go up and inventories shrink as we see some more obsolete and older buildings being torn down to get redeveloped for new construction.
For 11 consecutive quarters, the West Michigan office market has celebrated positive absorption. While still a strong contributor to the office real estate landscape, the CBD market is being joined by several suburban markets that are increasing their level of activity. The traditional Class A buildings, such as 99 Monroe and Bridgewater Place, are still widely seen as the places to be in Grand Rapids area. However, occupant interest has risen in suburban spaces such as the East Beltline, Cascade, and East Paris corridors. New construction projects are monopolizing the commercial real estate rumor mill in West Michigan, since it is the only option for most users seeking upper echelon space. The Cascade area is seen as first Class A office construction in 5 years at 4362 Cascade Road. Another new project is starting on the East Beltline, and projects are being discussed on Glenwood Hills and Kenmore, as well as several new downtown office buildings. While space is less readily available, the market has seen several notable transactions this quarter. Wilbur Ellis recently completed a 10-year deal on Eagle Crest Drive for 5,000 square feet, and Zondervan signed a deal for 36,000 square feet in the Belfry development on Sparks Avenue. Looking ahead, expect a fever pitch of new construction as high-quality office space locations become more scarce. Additionally, heightened interest in the suburban submarkets will continue relative to recent quarters, based on availability of product and several new construction projects.